Yo, what's going on, guys? Welcome back. Mitchell Waxer here, and in today's video, I'm going to be going over how you all can identify where the liquidity is at inside the market. And from there, you're going to see how it can pan out so you can go ahead and capture from one liquidity to the next. All right, because it's very simple, guys. Once the market takes liquidity to the downside, let's say, once it takes liquidity to the downside, its ultimate target is going to be upside liquidity, and vice versa. If they buy before they sell, which means they took out liquidity to the upside, their target is going to be double bottoms. It's going to be downside liquidity. And I'm going to show you guys that right now. So pay attention, take some notes. And also, if you haven't subscribed, make sure you go ahead and do so. Hit the bell. I have so much content coming out. So be ready. Let's go. All right, so first things first, guys, we need to talk about support and resistance because that's really the bread and butter of where the money is sitting inside the market. But first, let me tell you guys why. Well, guys, we all know support and resistance is taught in all platforms, whether it be free education, paid education, it doesn't matter. And this information is so well known because they want you to know how to read and identify support and resistance, because if they know where you're entering, they also know where you're exiting, and they also know the key thing is where your stop loss is at. And if they know where your stop loss is at, they know where they can push the money to go ahead and capture your stop loss and make more money. And when I say they, I'm referring to smart money, the big ballers. Okay, so support and resistance is key. You know, identifying those equal bottoms, those equal lows, double bottoms, or those equal highs. Now, they don't have to be picture perfect. They just have to be relatively equal highs or equal lows. So, you know, going to a pair, in this instance, we're going to be looking at GBP USD on the weekly time frame to start out. The reason why I'm on the weekly is because you simply need to identify where the overall direction of the market is going. If you could identify that, it will make it so much easier on the smaller time frames on where you know the market wants to ultimately go to. Because if we can find, let's say the market took out the downside, right? Now we know the market wants to come. If they sold before they bought, we now know that they took downside liquidity. Now they're coming to target upside liquidity. Okay, and if you know that on a weekly time frame, that means on the 4 hour and hour, you should ultimately only be looking for buy opportunities, because on the grand scheme of things, this thing wants to go up. So for an example, looking at this right at the bat, something sticks out to me right away, and it's these relatively equal lows. It almost looks like a big W from here down over here, up into the middle, and then back down one more time. It didn't quite make it up, but those relatively equal lows are right here. Boom, boom. And it's a zone. Okay, so if I were to draw this into the future like such, you can see what happened. Well, as the market came to this area, a support area, smart money knew that retail traders were buying when it came to this zone because of this support level. So what they do, they sold the market, took all that money, because the liquidity is simply sitting below equal lows or sitting above equal highs. Okay, whether it be double top, triple top, whatever. And they simply manipulate the market. They sell it and then buy it up immediately after, and vice versa. And once they do that, we now know, especially after it made that buy move, it came back and it came and played right into that order block, that last down candle before that up move. So that was another confirmation that this thing is now going up. So now where is the target on the weekly time frame? Do we have any equal highs, any double tops? Well, guys, I love the line chart. Learn to fall in love with the line chart, because you'll be able to identify equal highs and equal lows pretty easily. So on a smaller time frame, maybe the daily, you see these relatively equal highs, so that can be a target. And then also I see these relative equal highs as well. They aren't picture perfect. This one did go a little bit higher than the previous, but this is an area where the big ballers are looking to target, especially after having a big impulse move down like this to take downside liquidity. Ultimately, this thing wants to go up and take that upside liquidity as well. So now go ahead and break this down. You can jump down to the daily time frame, because ultimately we now know that this market is wanting to go up. It's wanting to catch and capture upside liquidity. Okay, so check this out real quick. You notice over here in this consolidation phase, when the market was trending down before this big down push, what do we see? Well, you have a high here and a high here. But with this market trend right up here, it trended up to take this high, and then we had that big fall off. So ultimately, this candlestick right here was that last up candle before the down move. This was a picture perfect order block that you can be looking at. So if we were to mark this up, and we marked up, the open in the 50% of this candle, just like that, this area right here would be our first target, an area that we're expecting the market to come to. So you guys can see how I take it from the weekly to the daily, and then I'm going to go to the 4-hour and possibly the hour as well, showing you areas that we're expecting the market to go to. And this is one exactly. We're going to be expecting the market to come all the way up to this zone. And as you can see, it's going to happen over and over and over again until it reaches its targets. You can see that we had a low here, and then as the market trended down to this area, you can see how it paused a little bit. It even spiked to the upside a little bit, but then what happened? We had a nice bearish candle, and then immediately a push up after that. Came back into this order block, and then immediately got away. But then when it got away, where did it target, guys? It targeted equal highs. This would have been your target one right here, your first take profit if you were entering off of this candlestick right here because of this institutional candle. Okay, if I'm going too quick, feel free to, shoot me a comment, ask me a question. I want to help you guys out as much as possible. So that's basically what we're looking at on the daily, right? And as you can see, for the past, week or two, there's been a lot of consolidation. So as we go down to the 4-hour time frame, right, you can see we had, after this push up, it broke these equal highs right here, right? But before it broke those equal highs, what candle or candles made it actually break through that high? Because if I were to stretch this out a little bit, you can see that a lot of people were selling it off of these wicks right here, right? Which caused it to come down a little bit. But smart money pushed it down with you guys, with the retail traders. But then right when they pushed it down, they shot it right back up, hinting that this down candle before the up move is that order block that you can play off of. And as you guys can see, when the market eventually came back to this area, this was your kill zone. This is where you enter for that buy opportunity. But notice how it's going to always take a low, right, or a high. But in this instance, we're looking for upside movement. It's going to take a low before it makes that move, right? It needs to capture liquidity. A low is pertaining to liquidity. A high is liquidity. Any highs or lows, there's going to be money above or below those areas. So there's always going to be money sitting above any high or any low. Keep that in mind. Okay, so it came into this kill zone, and now it shot up. Now here's the thing. The market just opened. It's Sunday. There's a lot of consolidation right now. I'm not even going to look at it on the hour time frame. I'm going to let this thing play out. I'll come back to it on Monday. I don't like to trade on Sundays. I let the market do its thing. But ultimately, what's going on? Well, what is this? This is relative what? Relative equal highs, right? And on the bigger time frame, we're still bullish, right? So we're bullish on all time frames. So we're going to be looking for upside movement. The question is, where exactly are we going to find that best entry? All right, so just let it play out. But ultimately, guys, you need to understand that you guys always want to be well aware of where the equal highs are and where the equal lows are. Any high, any low is going to be, there's going to be liquidity above or below those areas, but the double tops, the triple tops, double bottoms, those are going to have more liquidity in those areas. But start from the bigger time frame, guys, and work your way down to the smaller time frames, because it makes the process so much easier. You know what you really should be looking for, and you're not going to get stopped out when it breaks a low and then shoots up, because you already know that you're in an overall uptrend. So that's all I got for today, guys. Hope you guys enjoyed the video. Feel free to shoot me some questions. I'm here to help you guys out. I got nothing but love. And don't forget to subscribe, hit the like button. I have so much content coming out. So I will see you guys soon.